warahmatullahi wabarakatuh. A very good afternoon, Pak Niko, Pak Robi, Ibu, beserta semua, all of the participants of the 24th ICMSS. First of all, I would like to extend our appreciation to the students of FEB for being able to organize the 24th ICMSS. I think for those of you who do not know my capacity right now to be able to speak with you is representing CFA Indonesia. And I was actually invited by ICMSS to be able to give you a keynote speech in this special event of ICMSS. CFA Indonesia or CFA Institute has worked with the student body of University of Indonesia to be able to contribute to this event, particularly to become the knowledge partner of ICMSS. And for those of you who doesn't know CFA, we are the most recognized global investment professional certificate institution. Our commitment is to be able to develop professional capital market and investment professional in the form of how we will be able to develop the integrity as well as the capability of the investment professionals globally. One of the things that we have actually been pushing is that how are we going to be able to develop continuous lifetime learning and education, as well as advocacy amongst the investment professional globally, and to be able to improve their practices as well as the environment of the capital markets, as well as the investment and capital markets. Today, I would like to be able to share with you about three things. The first thing that I would like to be able to share with you is about the mega trends that we are seeing in the market today that is actually becoming more full of uncertainty. Some even are saying that right now we are living in the times of confusion. Nevertheless, most people agree that right now that there are three emerging trends that we are actually seeing globally in the world today that is potentially going to be relevant to you if you are going to be able to operate in the global capital markets today. First is actually the rising of the geopolitical tensions. The world right now is becoming more multipolar, particularly driven by the tension between the two superpowers of the world today, the US of A and China. The world right now, as it is actually being driven by the tension of the two powers, as well as some of the 2 minutes left. I thought I had 30 minutes. Because of this tension that is actually coming from these two of the global superpowers, we are also seeing that the competition has not only resulted in the geopolitical tension, but also the rising economic fragmentation as well. If you're looking at right now, the amount of FDI as well as the international trade, for the last 10 years, it has not actually been increasing. So we are now reversing the trend that we actually saw before. Before we saw a more integrated world. Globalization was actually the trend until the year of 2014. But since then, from already about 11 years ago, we are actually seeing that the world is actually becoming more fragmented. FDI and trade has actually shown that it's actually declining. Take FDI, for example, that has actually been showing a declining trend. Between 2018 until 2022, FDI to GDP of the world has actually been declining to only about 1.3%, compared that to the average of the FDI to GDP, which actually was about 3% or even 3.5% during the period between 2000 until 2015. So this is actually one of the challenges that we are actually facing, because the world is actually being fragmented. The international trade is actually declining. Also, this has actually resulted in the declining of the global growth as well. The second megatrend that we are also seeing today is actually the issue of climate, or how the world is actually going to be able to develop the mitigation action, including energy transition and adaptation initiative to be able to reduce the emission that is actually being produced. COP28, or what is actually called UNFCCC in Dubai in 2023, has concluded, for example, that the world is actually not on track to be able to reduce the emission target as prescribed in the Paris Agreement. And despite the most recent announcement by the new administration of the United States, it is expected that the world will continue to rally to accelerate for energy transition. It is estimated that to help the world in its effort in its transition into greener or green energy, about 4.4 trillion US dollar of investment every year. So at 4.4 trillion US dollar of investment every year will be required to help the world to transition into the green or the green energy in the form of batteries as well as other infrastructure such as green energy enabled transmission. Those are just some of the examples. China is now, for example, also targeting about 200 gigawatts of new energy and providing about 72 billion US dollar in the form of tax credits for electric vehicles. So these are some of the examples that other countries are actually doing to be able to help push the economy. And Indonesia obviously has a lot of potential to become the partner of the world in terms of helping the world in being able to transition into green or greener energy. The tension of the superpowers is also something that is affecting the competition for green technology as well, including in the form of the competition for the critical minerals and the products that has resulted in the critical minerals products such as solar panels and battery. The third megatrend that we are actually seeing today is the technological advancement, including in the form of artificial intelligence and the development of the semiconductor. The race for these technologies to increase the factor of production productivity is expected to continue to grow. And therefore, the contribution of the digital economy to the economy, that is by the year of 2022 is less than about 15%, is expected to reach to about 30% by the year of 2030. Furthermore, artificial intelligence or AI is also expected not only to transform industries, but also the future of work. The way that we are actually going to work is going to be transformed significantly. On one hand, artificial intelligence is expected to create more value for the technology sector. About 15 trillion US dollar globally is expected to be created by the year of 2030. But at the same time, some of the countries or some of the sectors that are not going to be able to embrace the AI technology will face the difficulty to compete, and therefore they will need to face the possibility of being able to see some destruction of its value. It is estimated, for example, that the total size of the digital economy in ASEAN, because of the driver of the AI as well as the semiconductor, will be reaching of about 1 trillion US dollar by the year of 2030. But it can potentially achieve up to about 2 trillion US dollar if we are going to be able to integrate the digital economy in ASEAN, which means that Indonesia also will need to think how Indonesia are going to be able to become part of the digital economy of ASEAN, not only becoming part of the digital economy in Indonesia. Payment as well as the personal identification are some of the examples how are we going to be able to enable the integration of the digital economy in ASEAN. In the short term, so those are the three mega trends that we are seeing globally. On the other hand, we are also seeing that there are some challenges in the short term. For example, the World Bank, due to the fact that of the geopolitical tensions, as well as war that is actually happening in Ukraine, as well as in the Middle East, as well as other flashpoints that has caused some of the supply chain disruption, has caused the global economy to slow down in the last several years, and this trend potentially can continue in the next few years. China is one of the countries that has been significantly affected by economic fragmentation, is now expected to also slow down in the coming years. So for the next several years, I think it will be very difficult for China to be able to see growth increasing to about 5%. The slowdown in China will, of course, affect Indonesia. China, by the way, is the largest trade partner of Indonesia. It is about 140 billion US dollar in terms of the total trade balance between Indonesia and China, and therefore, if China is actually slowing down, Indonesia obviously will need to pay the price in the form of declining economic growth as well. Third, the higher tariff as well as non-tariff barriers that is expected to be implemented, initiated by the US, but also potentially going to be retaliated by the other countries, will also expected to continue to push for some globalization internationally. And therefore, we are seeing that with the implementation of the tariffs, which might actually increase the inflation in the US, that may actually potentially also prevent for the reduction of the interest rate, not only in the US, but also in the other markets, and therefore slowing down the spillover of the investment into emerging markets, including that to Indonesia. Now, I would like to shift a little bit to Indonesia. The Indonesian macro environment remains to be quite robust and relatively better than the other economies. Indonesia is now the 16th largest economy in the world. By PPP measure, we are now considered as the 8th largest economies in the world. Our aspiration is to be able to achieve our economy to be the 4th largest in the world by the year of 2045 and emerge as a developed economy by that year. With close to about 280 million population, it is estimated that by 2045, about 70% of our population is actually going to be productive population. Indonesia is actually going to be one of the few countries that will be enjoying the demographic bonus, and the number of middle class population is also expected to be a very significant proportion of that. Indonesia is also one of the largest producer of the critical minerals. We have already mentioned to you that energy transition obviously will drive the demand of the critical minerals of the future. It is estimated that the total amount of critical minerals by the year of 2030, the total demand will be 6 times of the amount of the critical minerals that is actually being used by the year of 2022. Solar panels, battery are some of the examples of the green technology that will drive the need for the critical minerals. Indonesia obviously now is the largest producer of nickel and nickel-related products such as HMP and also other products of nickel such as cathode and precursor. We are now the 5th largest in terms of the producer of bauxite, the 2nd largest reserve in terms of tin, and also the 7th in copper and the 5th in gold. So therefore, Indonesia is clearly going to be one of the key beneficiaries of the energy transition in the future, and therefore this will also be one of the drivers of the future growth. Indonesia in the last 10 years has also built a massive amount of infrastructure, including toll roads, seaports, and also electricity. Just to give you an example, right now we already see that there are about 2,688 kilometers of toll road that is actually operating, compared that of only about 860 by the year of 2014. Therefore, we already see that in the last 10 years, we see that there are more toll roads that are actually being developed compared to the previous 69 years. Omnibus law, as well as other regulations, also improve the legal framework to be able to allow better ease of doing business and reducing the labor rigidity in Indonesia. Nevertheless, we are now still faced with many challenges that will need to require many reforms in many aspects of our economy and beyond. There is now very limited fiscal space to spur economic growth and to have push for the population to graduate to the middle income status. As a matter of fact, right now we are seeing that the total number of middle income population in Indonesia in 2024 is declining by somewhere of about 7 to 10 million compared to that in the year of 2019. And we are also seeing that Indonesia is relatively less integrated in terms of economy compared to the rest of the world. There are very few sectors and commodities that Indonesia is becoming part of the global supply chain. Net export in Indonesia is nearly less than 5% to our total GDP. Compare that to over the double digits that we are seeing in Thailand, Singapore, and Malaysia. So therefore, Indonesia will need to make a significant effort to try to integrate our economy better and becoming part of the global supply chain. Addressing the challenges, the government is working towards a more comprehensive growth strategy. The new government will prioritize improving purchasing power and developing the quality of the human capital. Fiscal expenditure will be directed towards basic needs and human capital development. Food security and education fiscal expenditure for 2025, for example, will be increased by about 25%, while infrastructure is reduced by 5.4%. The focus on food security will benefit the consumption, as 29% of the workforce is now working in the agricultural sector. We are also deploying stimulus package that will benefit the middle income, including easier access to job loss security benefits and the pre-employment benefits and card programs for workers that is experiencing layoff and extension of the 0.5% final income tax rate to extended to the small and medium enterprising that they can enjoy until the end of 2025. The government program also encouraged the development of the housing for 3 million housing per year through higher support for the low-income housing and extension of the 100 VAT incentives until June and 50% DPP until the end of 2025. The government has also outlined a quick win program, including providing nutritious meals in schools and nutritional assistance for toddlers and pregnant mothers, organizing free health checkups and building of high-quality hospitals in some districts, as well as improving the productivity of agricultural land through village, regional, and national food storage facilities. Not only that, the government has also set very ambitious targets to be able to increase investments, particularly in the form of FDIs, into strategic sectors. Investment is targeted to increase from 7,593 trillion rupiah by the end of 2025 to about 11,800 trillion rupiah by the year of 2029. Or growing somewhere between 10% to 11%. This is actually very challenging, but through this program, we believe that Indonesia will be able to actually achieve that by consistently growing about 5.5%. It will require us to target to grow our FDI and investment significantly by continue the effort on improving the ease of doing business, reducing the cost of making investment, improving labor productivity, which is actually very important in making sure that we are going to be able to invite investors into Indonesia, and again, by improving the quality of the human capital to better nutrition, education, training as one of the key initiatives. So thank you very much again to be inviting me to speak and providing you with a keynote. That was actually a little bit longer than what was previously expected, I guess. But I hope you will be able to enjoy the forum of the ICMSS, and again, congratulations to the organizer. Thank you.